Hi everyone, this is Dan and the future holds crypto. So I wanted to make this video today and try to keep it short again. It's related to the latest FUD, let's say, that all the market was spreading about Bitcoin, maybe crypto in general. Well, as you know, we had a big dip last night. The Bitcoin actually went back to 28.7 thousand dollars, I believe. Yeah, I was looking at it live. But what is interesting here is actually if you look across the board, it was a nice recovery. At least today it is a nice recovery, but you know how it is. If it's a downtrend, for example, it will go down slowly, but I don't think it's necessarily a downtrend or a long one. However, something interesting here is that Ethereum, for example, is holding quite well. Well, yeah, okay, Polkadot is holding even better. But compared to the last dip that we had last time, that it went actually to this very similar value, it was around, even lower, 27. I would say that Ethereum actually went to $900. Now it held much better. And if you remember, or if you watch my previous video, basically I tried to find some correlation in the buy Ethereum search trend on Google and a moment in time from the previous bull run in 2017, and I believe that I found something similar that led me back somewhere in May. So basically, then I also correlated with the chart, copied it around what we had now. It seems like pretty similar to what we had at that point. I believe for Ethereum, it's still, for example, now it's still it didn't break this pattern, but yeah, of course, it's just playing around. This can also go a totally different direction. However, it doesn't necessarily needs to be exactly the same. It might be a little bit different because history doesn't repeat itself exactly. However, it rhymes from time to time. So let's see how this goes. But I would say that for the moment, Ethereum actually held up pretty nice, and some other coins as well. Pretty nice recovery. Bitcoin didn't recover yet, but let's get to the subjects today. So what I wanted to say is that I've seen a lot of FUD on the market, and I believe that they're kind of weird as timing. There are too many articles coming from too many directions to bash Bitcoin, and it kind of seems suspicious from my perspective. Well, it's not the first time, you know. If you check the Bitcoin obituaries, you would see hundreds of obituaries for Bitcoin, or Bitcoin is dead, or stuff like that. Articles that did not age well at all. But we had a couple of not bad news, people saying some, let's say, not necessarily bad stuff, but their way of referring to Bitcoin from their position was not in a positive way, or at least if you could have extracted some positiveness for that, because for example, Christine Lagarde mentioned that there is some funny business going on with Bitcoin, and everybody on the global level needs to regulate Bitcoin. Well, to some degree, if you think about it, yes, we do need regulation, right? But how someone in this kind of like this position mentions this, it's kind of important and sometimes freaks people out. I'm not sure why in this market people are freaked out more than others. It's like any bad news that people sell, right? But it's interesting coming from Christine Lagarde, which, if you look back in history, actually she was convicted. So Christine Lagarde, convicted IMF head, found guilty of criminal charges over massive government payout. So International Monetary Fund chief Christine Lagarde has been convicted over the role in controversial 400,000 euros payment to a businessman. French judges found Lagarde guilty of negligence for failing to challenge the state arbitration payout to the former French President Nicolas Sarkozy. So the 60-year-old, following a week trial in Paris, was not given any sentence. He will not be punished. But in any case, I mean, she's talking about funny business, right? This is from 2016, by the way. Don't think it's from now, but still, it's funny to say that to see someone like this mention that Bitcoin is funny business. And of course, to some degree, it's right. But we're gonna get back to that as soon as possible. So then we had this double spend that never happened. Everybody was freaking out because of the double spend, right? So the double spend, in theory, this is exactly what Bitcoin should have solved. It's including the white paper and everything. So if this would have really happened, it would have been a big deal because everybody would have lost, and probably that's why some panicked and sold. But having a double spend happening in real life, basically you have the possibility of losing your transaction. Let's say you send, it was only for $22 this time, but so 21, but it could have been for 1 million if it was real. However, it was not. So the timing when this news was released was interesting. So interest in the Bitcoin double spending grew after recent news. The Bitcoin network processing the same Bitcoin in two transactions. The very double spending scenario was specifically designed to prevent, except the double spend didn't happen, at least not in a traditional sense. The Bitcoin double spend media headline has certainly spooked investors, but it's a misunderstanding of how the Bitcoin network operates. In this case, a chain of reorganization of one block occurred, which is a fairly common occurrence, Jason Lau, CEO of OK Exchange, told CoinDesk. Put another way, no Bitcoin was double spent because no coins were added to the Bitcoin supply. Instead, the same coins from the same wallet were registered in two different blocks during a typical split in Bitcoin's blockchain. The reason this does not qualify as a double spend is because only one of these transactions, one recorded on Bitcoin longest blockchain history, is considered valid by the network, while the Bitcoin in other transaction cannot be spent because of the network does not consider it valid. So if you want to read more about it, I'll link this below. It gets a little bit technical, but the fact is that basically it didn't happen. I find it weird that it was released in the same time with the others. As news. What I wanted to show you, another thing. Let me. Okay, then we have Yellen. So, speaking at the Senate Finance Committee hearing today, Janet Yellen, President-elect Joe Biden's pick for Secretary of the Treasury, said that cryptocurrencies are a particular concern when it comes to criminal activity and terrorist financing. Yellen continued, I think many cryptocurrencies are used, at least in a transaction sense, mainly for illicit financing. And I think we really need to examine ways in which we can curtail their use and make sure that anti-money laundering doesn't occur through those channels. So, I think, well, the problem here is that she used the word mainly, right? Well, yeah, you can counter-argument this, but I think many cryptocurrencies, maybe there are some used for that mainly, right? But to some degree, of course, again, someone in her position needs to be very careful when mentioning stuff like that. But to be something that I wanted to show you, basically, it's other than, well, let's go it in steps. Give me a second. Not this one. Okay. Well, first of all, wanted to show you something. I mean, I cannot wonder if she has some other interests in play, because she, from my perspective, looking at this, and actually saw Ivan Ontek showed the spreadsheet with how much Yellen was paid to speak at different bank conferences and events. So, long story short, Yellen earned around 7.2 million from dozens of speaking engagements in 2019 and 2020, according to a disclosure form submitted by Biden's transition team this week and posted by Office of Government Ethics Thursday night. The formal Federal Reserve Chair clients, including Citi, which paid for the last 9 speeches, Goldman Sachs, Credit Suisse, Deloitte, Salesforce, and other several Wall Street banks and large corporations. So, well, she's clearly a representative for all of these big banks here. I cannot but think if she has basically representing more of their interest than the normal investors and new emerging technologies, let's say, right? Another thing that I wanted to show you, well, this is a false narrative. The majority of cryptocurrency is not used for criminal activity. According to an excerpt from Chainalysis 2021 report, in 2019, criminal activity represented 2.1% of all cryptocurrency transactions volume, roughly 21.4 billion worth of transfers. In 2020, the criminal shares of all cryptocurrency activity fell to just 0.34, 10 billion in transaction volume. So, where did she get those numbers? Why did she use that word mainly? Well, and wanted to, let's give you a little bit. I actually had a video about talking about money laundering because it pissed me off again, past time a few months ago. People using this false argument to try to dismantle Bitcoin or cryptocurrency, which is funny from my perspective, because looking around it, it's like compared to the banking system, what's going on there, it's nothing. I mean, I would say that probably the most of illicit transactions are happening in the big banks, right? In the big players, with the big players, with the banks that you think are legit, right? That are safe, that are playing by the rules. So I'm gonna go back to an MIT Technology Review article. So criminals thought Bitcoin was the perfect hiding place, but they thought wrong. So I want to show you who Chainalysis is. A notice to people using Bitcoin for illicit purposes: you can run, but it's getting a lot harder to hide. And this is from September 2017. Law enforcement officials are using Bitcoin public ledger, called the blockchain, to follow the digital money and track down suspected criminals using it. Blockchains provide a really useful source of truth, says Jonathan Levin, co-founder of Chainalysis, which develops software tools for analyzing blockchain data. Its products can help investigators draw inferences about how people are using the currency. Chainalysis combines its analysis with other publicly available information to identify users through the unique strings of numbers they use on the blockchain, called addresses, and then map how they move funds around. This technique can be used to do things like identify the Bitcoin exchanges where the users of gambling sites are converting their Bitcoins into dollars. Chainalysis tools are clearly valuable to criminal investigations. Since 2015, the company has supported investigations by the U.S. Internal Revenue Service, the Federal Bureau of Investigation, and the Security and Exchange Commission, the Drug Enforcement Administration, Immigration and Customs Enforcement, and Europol. In most cases, investigators turn to Chainalysis when they already have some kind of a lead. But yeah, that's what I wanted. I'm gonna link this article as well. But this is Chainalysis, right? It has a history. A lot of big institutions, state government institutions, are already using it. The blockchain, basically, the ledger is public. It's now, with all of the technology, you can actually, they found a way to use all of the data around it to identify, and this is only getting better. And this is how it has to be when new technologies are emerging. What are you going to do? Are you going to cut off internet? Let's kill the internet. Why? Because there are crooks on the internet. They are using it, right? Man, I mean, let's stop the bed industry. Why? Because crooks sleep into bed and then they are less tired or to start with their crooking activities, right? And they're fresh in the morning because of that. Beds are at fault here. So you get what are you getting what I'm going? Yeah, any new technology will be used by everyone, right? Of course, you have to do something to make it harder and harder to criminals to use this, or as in any other case, you have to develop and keep up with the new technologies, so you can prevent criminal activities, or like with any other thing in the world, right? You don't have to kill a technology for that. And yeah, of course, this is why to some degree probably regulations are needed, right? It's not a bad thing. Regulations are needed, but regulations should be fair, and it will be interesting to see how this plays along, right? And this is actually the Chainalysis report, where it says the same thing that I mentioned before. So basically, the drop from 2.1% to 0.34%. So I'm not sure where she's getting the information, but probably she didn't study the case at all, right? And another thing that I wanted to show you, this is the banks are screaming around that Bitcoin and cryptocurrencies are used for illicit transactions, but banks moved 2 trillion, defying money laundering orders. The documents identify more than 2 trillion in the transaction between 1999 and 2017 that were flagged by financial institution internal compliance officers and possibly money laundering to our other criminal activity. The top 2 banks are Deutsche Bank, which disclosed 1.3 trillion of suspicious money in the files, and JP Morgan, which disclosed 500 billion. So, yeah, these are the guys, right? Another thing, JP Morgan pays largest CFTC penalty, over 920 million, and admits wrongdoing in the market manipulation case. JP Morgan agrees to pay 920 million and admit wrongdoing to resolve a case over claims of market manipulation in the trading of precious metals and treasury securities, Bloomberg first reported on Tuesday. So 922 million payment represents the largest monetary penalty imposed by CFTC and consists of 436 million fine, 311 million in restitution, and then 170 million in disgorgement. CFTC statement by Brookman said. So basically, they admitted they manipulated the market, right? These are the guys saying that Bitcoin and cryptocurrency are used for illicit transactions and they're manipulated markets. Yeah, of course. This is a new market. This is an emerging market. This is a new asset class, right? Of course, it has things that you have to work on, and you have to acknowledge the fact. You have to acknowledge that the technology and how this market evolves. It is at infancy level, right? It's still at the beginning. A lot of people don't realize that. Yeah. So of course, is it perfect from the beginning? Nothing is. Nothing is. Do you have to fix that or kill it because it's not perfect? It's like, just wanted to go through this. And there was another one here. It was very funny from my perspective. So you have this timing, right? BlackRock actually announced. Let me see if I can find it. Okay, this is it. BlackRock has joined the Bitcoin business, and the world's largest asset manager has said 2 of its funds can now invest in cryptocurrency. BlackRock has authorized 2 of the funds to invest in Bitcoin futures, according to filing with the ACC. Well, BlackRock is huge. It's the biggest asset management fund manager. The 8.7 trillion asset manager said it could use Bitcoin derivatives amongst other assets under the BlackRock Strategic Income Opportunities and BlackRock Global Allocation Fund. So, I mean, this is interesting as timing, right? You know what it is? This basically, this is retail investors, how they believe, how they think, right? Whenever Bitcoin is on the top, it's time to buy Bitcoin, right? Whenever it dips, it's time to sell. Who buys when it dips? Well, the last time it was Grayscale, PayPal, Cash App. Now, who buys this? Probably BlackRock, Goldman Sachs, JP Morgan. Who will be next? Maybe the United States government and Europe, right? But think about it. Don't panic sell. Well, of course, there's a risk. From my perspective, people say that this is basically the end of the bubble, like it was in 2017. Well, looking at the past data, that's improbable. Is it possible? Of course it's possible. You have to put your big boy pants on and accept your risks when you do something like this, right? But the past data shows that this is not probable, right? It's actually, look at, I like this chart, Bitcoin stock to flow model, live chart. So look at this. Look at this. This actually takes in account the halving events, and up until now, it followed this chart beautifully. I mean, it's one of the most beautiful charts I've ever seen. And this is where we are at this point. If you look in 2017, it's probably around here. We still have some upwards movement to go until this bubble bursts and the new cycle begins with the bear market and everything, right? If it does. So basically, I don't think this is the end of this bubble, right? Is this a correction? Yeah, it was kind of painful. Yeah, of course. You have to deal with the emotion. Is it easier said than done? Yes, it is. Definitely it is. This is something that basically you have to learn on your own skin, I believe. It's very easy to say that, yeah, you don't have to do it with emotions. But when you're seeing your funds going down, you will have emotions. Maybe in time you get used to it. It is hard. But, well, after a lot of experience, maybe it numbs you out and you don't care anymore, right? But in any case, it's very improbable that this is the end of the bull market, right? And I've seen another thing that was interesting. Is like some other people saying that Bitcoin is the biggest bubble with the stock market and it's about to burst. Well, that's what I'm saying. I don't think it is in the I mean, not yet. Will it be? Yeah, of course, following the cycles. But wanted to ask, compared to what is it in the bubble? Compared to what the stock market is in a bubble? Compared to dollars? Look at this graph. Billions of dollars, Board of Governors and Federal Reserve System, US. Look at this part here. So from 4 trillion to 7 in the last few years. And look at this. This is in the last year. How much parabolic do you want it to go? I mean, it probably has a lot, some headroom outside. I mean, usually bubbles take longer than you believe it takes, right, to burst. But compared to what the stock market is in a bubble, right? Look at how much they printed money here. Look here. Look at the European Central Bank. Very similar, if you ask me. They went to 7 trillion. Maybe that's why they, to some degree, keep the ratio between USD and euro. But this money will all get into the market, right? And you will see at one point the effects of inflation. Maybe this is the first one. Just people realizing this is happening and trying to invest their money into assets, into the stock market, into crypto. Maybe that's the first sign. So think about it. And I've heard something interesting about, I'm not going to cover it because it's I need to get too much into it, but there are some proposed tax policies now that basically say that in US they want to tax people for unrealized gains. That would be funny. Imagine buying a Bitcoin, for example, in 20,000, going to 40, let's say, and being taxed for the difference in profit without actually selling your Bitcoin, right? You have to pay the money. You haven't sold your Bitcoin, but then it crashes to 25. You have taken a risk, and you're still going to pay for it. If that comes through, if that policy is accepted, it will be. I mean, I don't want to be disrespectful here, but it will be very hard for America. I mean, for US, it's basically they're forcing people to get their money out of the market, right? Out of the stock market. They would force them and out of the asset because they would want to pay taxes on something that is very very risky. They don't want to take the risk because they'll have to pay it, double the payment basically. and they will have to face this. They will have to face the inflation. Yeah, I'm curious how that will go, but hopefully it won't pass. Yeah, we'll have to see. So thank you for watching. If you enjoyed this video, please hit the subscribe button, hit the like button, and see you in the next one.